the United States being a net importer of metal, has never happened. An administration who continues to drop clues and hints that gold and silver are certainly, whether it be reclassified as a strategic mineral or the comments, Trump, he who has the gold makes the rules, Besant being a self-proclaimed gold bug. We've talked about Judy Shelton, or Senator Lummis, all of the things about gold revaluation. The Federal Reserve just wrote a report on it. Everything that's happening with the BRICS, and this is something that should not be overlooked, and they are massively tied to gold. The fact that now the rumor about everything I was talking about with the expansion of the Shanghai Metals Exchange and the settling in gold outside of the trading and local currencies over Enbridge, they're now talking about the rumor they will have a gold-denominated repo facility that will be part of the Shanghai Metals Exchange, where you will take gold and use it as collateral with metal held in the Shanghai Metals Exchange and in the series of vaults that are now being built all around the Belt Road. The next one is being built right now in Saudi Arabia, which is very symbolic, but using it as a repo facility for renminbi-based loans where, all of a sudden the Chinese and the Belt Road Initiative, who are trying to help build this ecosystem amongst all of these underdeveloped countries, will take gold as collateral for loan for repo. Repo is typically associated with giving liquidity to the worldwide market by exchanging treasuries for cash and then being able to buy them back at a later date at a higher price. If you can now switch that to gold, my point is that I truly believe we are just getting started. I truly believe with the passage of the Genius Act and the passage of a synthetic demand for U.S. treasuries, we have entered a new monetary system, and gold will be part of it. Silver will follow. Should you take profits? Sure, it's not a four-letter word. You certainly could. Would I personally? No, not yet, because I've never seen a market that behaves quite like this one does, with the fundamentals that are growing at the highest levels. And I guess what I would simply say is that when like I said, the people running the money printers are buying gold, the central banks, you should pay attention. When the most sophisticated institutional traders in this country go from net sellers to net buyers, you better pay attention, and it's just beginning. And then the U.S. government comes in and says silver's now a strategic mineral. That's just a floor been put underneath the price of silver by the U.S. government. And the massive imports coming into the United States, I would argue there's a floor under the price of gold. Ultimately, I think gold will be tied to a new system, a new monetary system. It will be definitely tied to one in the global south, and I think it will be tied to the treasury market here, a floor underneath the price of gold. So in my mind, this time is different. There's nothing wrong with taking a profit. It means you've won. But I would say that I think you'll look back at it. Look, let me put it this way. Goldman came out and said if the market even thinks the Fed loses any bit of its independence, you'll see gold at 5,000 like that. Does anyone believe the Fed is independent anymore? With Stephen Miran, the architect of the Mar-a-Lago Accord, now being put into the Fed, and the pressure that Trump is giving, and all of a sudden they talk about bending to 25% or 50% drop tomorrow. The Fed has lost its independence, which is nothing new, by the way. You go back through history, the Fed and the president have been intertwined more than you would think. They're telling you gold's going to go higher. And you look at a guy like Luke Groman, who's as smart as anyone in this industry. He said, yeah, they're going to let gold go much higher, slowly, organically, before they revalue it. So let's look at it from a standpoint of price set, which is really, I think, part of the bigger picture to reach real price discovery. When you have a market where price is discovered, for example, in London and or in the United States, this is the problem, I think, in that the LBMA and to a degree also the COMEX have been setting prices for the entire world that have been massively rehypothecated. In other words, they sell the same paper over and over and over and over again, fearing or realizing that no one ever stands for delivery until they now are standing for delivery. And so when you see all of these exchanges being set up around the world, in Moscow, in St. Petersburg, in Shanghai, in Hong Kong, in Saudi Arabia, in Singapore, all around the world, these are exchanges where the people not only have been accumulating tremendous amounts, but they're the ones who understand it a lot better. These are mostly cash and carry markets. Ultimately, I could see a point where the LBMA is on the ropes. And I mean, I really do believe that the LBMA is on the ropes right now in many respects. I mean, there was just an article by a guy named Daniel Gali, senior commodity strategist at TD Securities, warning investors that silver appears to be entering the end game of the current cycle as demand, now driven by renewed investor interest, eats away at the last dregs of above ground supply. In an interview with Kitco News, Gali said the free-floating stockpiles in the vaults of the London bullion market could run dry within 7 months if investment demand picks up. They actually only have about 1 day's worth of trading in silver right there. That's it. They have 140 million ounces of silver in London, yet they're trading over 600 million ounces a day. They have 1 to 2 billion in paper claims. Ounces, 1 to 2 billion ounces of paper claims standing against 140 million ounces of silver. All of that metal has come back to the United States, and we were supposed to believe that it was under the auspice of tariffs. No, I said from day one, this has nothing to do with tariffs. They're reshoring it. The LBMA is on the ropes right now, and in other words, price discovery has been a function of suppression by the West. I think there will come a point a few years from now where the price setting is done in the East, and the COMEX and the LBMA are rendered not the primary price setting mechanisms of the world. You could see a combination of both pushing gold and silver substantially higher. And if gold is pegged to a new system, which I believe it will, whether it be treasury market here or backing a new settlement system in China and the BRICS nations, there's a floor underneath that too. And so, yeah, I mean, I think it's both, really, and maybe equally.
You know, I'll tell you something that still shocks me, even after all these years in the business. The United States is now a net importer of precious metals. That has never happened before in our history. Think about that for a second. The country that once sat at the very top of the monetary pyramid, the nation that held the largest hoards of gold on Earth, is now scouring the world for supply. That's not just some quirky statistic. It's a flashing red light. It tells you something deep has changed in the foundation of the financial system. And I don't care if the mainstream media won't cover it, I'll cover it here. Because if you ignore it, you do so at your own peril. And here's the kicker. While this is happening, we've got an administration dropping clues left and right that gold and silver are going to play a bigger role in the years ahead. Remember when Trump said, "He who has the gold makes the rules"? That wasn't just a throwaway line, that was a signal. Trump has openly called himself a gold bug. You've got Judy Shelton, a longtime advocate for re-anchoring the dollar to gold, floating through the halls of policy. You've got Senator Lummis out of Wyoming, one of the few on Capitol Hill, who actually understands monetary history, pushing for sound money. Even the Fed itself, yes, the Federal Reserve, recently published a report on the possible role of gold in a reset. That should tell you where we're headed. Now combine that with what the BRICS are doing. For years, I've been pounding the table that the BRICS weren't just a trade alliance. They were building a parallel financial system. Well, here it is. They're expanding the Shanghai Metals Exchange. They're talking about settling trade in gold directly, bypassing dollars, bypassing SWIFT. And the newest rumor, one I take very seriously, is the creation of a gold-denominated repo facility. Let me break that down for folks who don't live and breathe financial plumbing. A repo, short for repurchase agreement, is like the grease of the global banking system. It's how big institutions lend cash short-term against collateral, usually treasuries. You post treasuries, get liquidity, buy them back later with a small premium. Simple. It's the heartbeat of the dollar system. But now imagine doing that with gold instead of treasuries. Imagine Saudi Arabia or Brazil pledging gold stored in a Shanghai Metals Exchange vault, borrowing renminbi, and recycling that liquidity through the Belt and Road Initiative. That's not just innovation, that's a revolution. That's China saying, we can give you credit, we can give you infrastructure, and we'll do it on a gold-backed basis. Folks, that's not science fiction. That's happening. Do you see the symbolism here? The next major vault they're building is in Saudi Arabia. That's the birthplace of the petrodollar, the deal Kissinger cut in the 70s to make sure oil was priced in dollars. Now, 50 years later, the Saudis are building a vault for gold settlement tied to China. You don't need to be a conspiracy theorist to understand the shift. The petrodollar era is ending. We are moving into the petrogold era, and very few people are ready for it. Now, I get asked all the time, Andy, should I be taking profits here? Gold is already strong, silver's on a tear. Maybe I should ring the register. And my answer is simple. Profits are never a dirty word. If you want to take some money off the table, do it. But me personally? Not yet. Because in all my decades of doing this, I have never seen a setup like this. The fundamentals are not just strong, they're getting stronger at the highest levels. And it's just beginning. Let me tell you why I say that. Look at who's buying. The central banks are buying. The people running the printing presses are turning around and exchanging their paper for gold. That's like a chef refusing to eat his own cooking. When the printer class hoards metal, you should pay attention. Then look at the institutional flows here in the United States. For years, U.S. institutions were net sellers of gold. Now they've flipped. They're net buyers. Seven-figure orders are routine. Sovereign wealth funds are hoarding. Pension funds are sniffing around. When the most sophisticated players in the world change sides, that's a big deal.
I think that is an incredibly intuitive question that you've asked.
Well, thank you.
So, yeah, because let's talk about that for a moment. Speculators, after months of little bit of liquidation in the gold market, where the speculators were taking profits and gold kind of just chopped sideways, they are returning with massive open interest rising again in the futures market. What open interest means is people are coming in to buy more open interest. They're buying more contracts, and prices breaking out again as we see it nearing 27 or 3,700. This is the normal link between purchasing and higher prices. Okay, to your point, and you're the first person who I've talked to in a while that's got, and that is that the silver rally right now is driven not by speculation, but I would argue this systemic short squeeze, because record high lease rates, you have falling open interest, meaning the speculators the hedge funds aren't buying. You have massive delivery demands, 58 million ounces since late August, 10,550 tons year to date. This points to a shrinking physical liquidity and mounting pressure on the market in London. London shows that they're trading 600 million ounces of silver a day, representing between 1 and 2 billion paper ounces. Claims 1 and 2 billion, and they have 140 million ounce free float backing that 1 to 2 billion claims and 600 million ounces a day. So it really means that London basically virtually has no free silver to meet rising investor demand or back the billions of ounces in outstanding contracts. And with the lease rates at that level, it's basically the risk of a delivery default in London is rising. And that is the point where I do believe that what you just said is true, that there are traders that smell blood in the water with silver, and it is being pushed up because of the falling open interest, more short squeezing than by anything else. And silver is something called a Giffen good, or Giffen good means that as prices rise, demand increases. That's kind of abnormal in investing, but shortage is even worse, because as the price rises, you'll get the industrials that say, man, we need to just jump on this now, like Tesla, because we need, so much silver and the price keeps going, let's just jump in.
Right, they got to lock it in as a hedge. Yeah.
Yes. And so, yeah, really, 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 really good question. And I would say gold's open interest is massive. That's the central bank. Silver open interest is falling a little bit, but the price keeps rising. That's a short. When you will see investor demand and industrial needs collide, the market will face, I think, that moment where there is a battle between the hedge funds and the industrial, which will massively add fuel to the fire, because the realization will be that that's exactly what is happening. And when you see the amount of silver coming in the first week of the September contract, as an example, we saw literally almost well over $2 billion worth of silver delivered into COMEX in just the first couple of days of this last week in the September contract.
When I say this time is different, I don't mean that the laws of markets and human nature have been suspended. No, greed and fear are still here, the same as they were in the days of tulips, dot-coms, or housing bubbles. What's different is the architecture of the system around us, the plumbing, the pipes that carry the money flow. And when you change the plumbing, you change everything that flows through it. Let me take you back for a moment to how price discovery has worked for decades. The LBMA in London and COMEX in New York were the kings. They controlled the narrative. You had this massive leverage, contracts written on contracts written on contracts, and the world went along with it because it was liquid. But let's call it what it was, a casino with IOUs instead of chips. Now, when nobody stands for delivery, the game works. But once people start standing for delivery, the house of cards shakes, and people are standing for delivery. Central banks, sovereign wealth funds, even some very large institutions are saying, no more rollover. Give me the bars that is new, that is significant. And that is why you're seeing the strain in the system. When the LBMA admits it has only a day's worth of trading stock in silver against billions of ounces of paper claims, that's not sustainable. That's like a bank telling you it has 1% reserves against its deposits. Except worse, because here we're talking about a physical commodity with industrial and monetary demand. Meanwhile, new exchanges are popping up everywhere. Shanghai, Moscow, Singapore, Hong Kong, and yes, soon Riyadh. These are not just financial experiments. These are the seeds of a parallel price discovery system. And the difference? They're largely cash and carry, meaning if you buy, you settle. If you sell, you deliver. That's honest price discovery. That's how markets are supposed to work. And once enough volume migrates there, the West loses its chokehold. At that point, the paper games collapse under their own weight. Now, people often ask me, Andy, if it's this obvious, why doesn't Wall Street pile in now? Why isn't everyone front-running this? Well, remember what I said earlier. I actually like the fact this bull market is invisible to them. The less competition, the better. The big institutions will come. They always do. But they're late money. They're trend followers, not trendsetters. They'll wait until gold is $5,000 and silver is $200 before they call it a buy. Just like they were calling gold a barbarous relic at $250 back in 2001. That's the rhythm. That's how this game works. And let's be honest, a lot of these big firms are still stuck in their own narratives. They're distracted by shiny objects like Bitcoin. I have nothing against crypto as a technology, but let's look at reality. 4 years ago, Bitcoin priced in gold was higher than it is today. Despite all the ETFs, the celebrity ads, the Super Bowl commercials, the endless hype, Bitcoin has been losing ground against gold. That's not an opinion, that's math. Meanwhile, gold quietly doubled, and now silver's waking up. That tells you where the smart money is. Even guys like B. Kelly, and I'll give him credit, who once pumped Bitcoin as the new gold, are quietly moving tens of millions into physical gold. Because at some point, even the most stubborn minds can't argue with history. 5,000 years of history beats 15 years of hype, every single time. Now let's talk about silver for a moment, because silver is where things get really interesting. Gold may be the mama, the anchor, the things central banks want, but silver is the fuse. It's more volatile, it's more industrial, and when it moves like nothing else. Right now, silver has been consolidating below $50 for decades. That's a double top, first in 1980, then in 2011. Markets remember those levels. They're like scar tissue. And so yes, silver has real resistance there. But once it breaks, once it's at $51, $52, and that ceiling becomes a floor, then you're looking at a rocket because there's no overhead supply. The chart is clear sky. I think silver will double to $100 quickly, maybe within months. And from there, who knows? $200 is not a pipe dream, not when gold is on its way to $10,000. And let me emphasize, the fundamentals for silver are not just monetary, they're industrial. Solar panels, electronics, 5G, AI, all of it eats silver. China controls 80 to 90% of the world's solar panel production. Guess what they're hoarding? Silver. Production is flat globally, demand is rising, and the float is shrinking. You don't need to be a Wall Street quant to see where that leads. You just need to know supply and demand 101. But here's the real kicker. Silver has been money as long as gold has. The US minted silver dollars. The Romans used silver denarii. Civilizations throughout history trusted silver as much as gold. And in times of crisis, silver shines because it's accessible. You don't need to be a billionaire to buy it. That's why when the panic sets in, silver gets mobbed by retail and industrial demand simultaneously. That's when the fireworks start. Now let's weave in the political angle, because politics always bleeds into money. With Trump back in the picture, with talk of reshaping the Fed, with Judy Shelton's ideas floating again, with people like Senator Lummis pounding the table for sound money, the landscape is ripe. Goldman Sachs itself admitted it. If the Fed loses independence, gold goes to $5,000 like that. Well, tell me, does anyone actually believe the Fed is independent anymore? Seriously? Powell's been dragged by every White House since he took the chair. The pretense of independence is gone, which means the conditions for $5,000 gold are here now. And this isn't just about the US. Look abroad. BRICS are openly building gold-based infrastructure. Putin, Xi, Modi, they're not even hiding it anymore. They're trading in local currencies, building vaults, setting up repo facilities backed by gold. That's the writing on the wall. The dollar's role as global reserve is being chipped away brick by brick. And when the dollar falls, what rises? Gold, silver, real assets. Now let's touch on something important. Sentiment. Most people still don't own precious metals. They don't even think about them. Ask your neighbor if they own gold or silver. 90% will say no. Ask if they own stocks? Yes. Bonds? Yes. Crypto? Maybe. But gold? Number. That's an opportunity because the herd hasn't arrived yet. And when they do, it's like trying to pour an ocean through a straw. There simply isn't enough metal available at today's prices to satisfy that kind of demand. That's when you get the parabolic move. That's when you get short squeezes that bankrupt traders. That's when you see headlines screaming, gold $8,000 or silver $250. And by then, you'll wish you bought earlier. And let me remind you, history is on our side. The last time the dollar lost credibility on a global scale was 1971 when Nixon closed the gold window. What happened next? Gold went from $35 to $850 in a decade. Silver went from $1.50 to $50. That was without BRICS, without China's rise, without trillion-dollar deficits, without digital tokenization of gold. Imagine what happens this time with all of those tailwinds. I'll give you one more angle. Revaluation. Luke Gromen, Judy Shelton, even people inside the Fed have floated the idea that gold could be revalued higher to stabilize debt. Roosevelt did it in '33, raising the peg from $20 to $35. A 70% devaluation of the dollar overnight. If the US did that today, pegging gold at say $10,000, it would immediately shrink the real debt burden, it would restore confidence, and it would ignite the greatest wealth transfer in modern history. That's not my fantasy, that's arithmetic. And the higher gold goes, the more it benefits the balance sheet of any nation smart enough to own it. That's why central banks are buying. They know revaluation is coming. So where does this leave us? At the threshold of a reset, a slow-motion, organic reset where gold and silver reclaim their role as anchors. The East is leading, the West is lagging, but the outcome is the same. Price discovery shifts, paper games end, floors are set, and metals go higher, much higher. Now, I want to close with a thought for viewers. We're living through history. Most people don't realize it until it's too late. In 1971, people thought closing the gold window was just a temporary technicality. In 2008, people thought subprime was contained. In 2020, they thought printing trillions would be painless. And here we are. Don't wait for CNBC to tell you it's time to buy gold. By the time they do, it'll already be $7,000 and silver will be $150. The smart money moves before the headlines. So yes, take profits if you want. No shame in that. But don't lose sight of the bigger picture. This time is different. The foundation is shifting, and the people running the printing presses, the ones who see behind the curtain, are buying gold. They're hoarding silver. They're building vaults. They're writing laws. They're telling you, in their actions, if not their words, what comes next. And when you look back years from now, you'll realize the clues were all there. The signs were flashing, and you had a choice, to act or to wait. I know where I stand.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.